According to the Bank of International Settlement, the notional value of the global derivatives market is over $730 trillion. African fintech firms have emerged from every corner of the continent in various stages of development, from incubators to early-stage pre-seed capital raising firms to joint ventures with Google, Microsoft, and AWS. Conferences like this conference today are vital to the importance of the notion of collaboration and the creation of opportunities. Being here today, I know that we are empowering not only the development, but also the opportunity for consumers to have more control and access in financial services than ever before.
See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light.
It is my privilege to kick off today's Africa FinTech Summit of 2025. I understand that twice a year, this convening serves as one of the largest gatherings of Africa's FinTech community, connecting entrepreneurs, investors, and regulators during this IMF World Bank Spring Week in DC and also in the fall on the continent. My tremendous thanks to the organizers and hosts. As each of you could see when you arrived this morning, I'm sure you appreciated that we ordered perfect spring weather for you and beautiful blooming cherry blossoms just for this particular week and these events. There are a few places in Washington, D.C. that are as lovely as the place we sit in today, Georgetown. In my career, I've learned entrepreneurship from mentors and clients at some of the world's largest financial institutions, in fact, two of the largest investment banks in the world, from small startups and from family-founded businesses. My family's history in entrepreneurship and informal investing in community businesses dates back to the mid-1800s in the United States. Perhaps one day, I will have the opportunity to continue this rich tradition and help to fund businesses of innovative founders. For today, I am a commissioner at the U.S. Commodity Futures Trading Commission. I was nominated by President Biden and confirmed unanimously by the Senate. I could never have known how difficult it might be to say those words again until these last few weeks. But we'll remain hopeful. We'll remain hopeful. The CFTC does really interesting things that involve derivatives contracts for referenced commodities that are harvested from all over the world, but I would highlight centrally from many countries in Africa. According to the Bank of International Settlement, the notional value of the global derivatives market is over $730 trillion. In recent years, courts and Congress have indicated an intent to expand the CFTC mandate to distributed digital ledger technologies, commonly referred to as blockchain technologies, digital assets, including cryptocurrencies, and certain platforms within the assemblage of technologies referred to as AI. African fintech firms have demonstrated, in my humble opinion and certainly in my actual experience, curiosity, creativity, and driven commitment to deliver first-rate fintech products and services to consumers and businesses on the continent and around the world. During my time as a CFTC Commissioner, I've traveled to South Africa 3 times, Kenya, Ghana, and other places to meet with fintech entrepreneurs on the continent. In fact, Zambia is a place I didn't reference, but that was a quite fun trip. I've witnessed firsthand the exceptional creativity and curiosity that drives African fintech entrepreneurs. As you well know, and I am announcing nothing here because you're deeply familiar with CNBC's announcement last year that 6 African fintech firms are among the world's top fintech firms. These include PalmPay, Flutterwave, MTN, PiggyVest, and Yoko, among others. African fintech firms have emerged from every corner of the continent in various stages of development, from incubators to early-stage pre-seed capital raising firms to joint ventures with Google, Microsoft, and AWS. African fintech firms enhance financial accessibility, inclusivity, and consumer empowerment. These businesses demonstrate integration of the most advanced technologies available, reflect global thought leadership, In the context of emerging technologies, they've demonstrated the potential to reshape opportunities for consumers and for commercial finance, as well as creating pathways for inclusion that have inspired creative consumer finance solutions around the globe. As you well know, a great idea alone is not enough for entrepreneurial success. Building opportunities in fast-moving, high-tech markets requires a number of critical inputs, as well as conditions to facilitate growth and development. Entrepreneurs and innovators, funders and sources of capital, and yes, regulators, all have an important role to play in promoting responsible innovation and growth. It's been my pleasure to collaborate with regulators around the continent as they consider ways to spur innovation and growth. Last year, during a keynote address at the South African Reserve Bank's Fintech Summit in Johannesburg, and then earlier this year, in fact, in Ghana, I emphasized the opportunities for African fintech firms to innovate using AI in consumer finance. In the opening remarks for my comments in South Africa, I noted that in U.S. markets, but in particular in financial services markets, we've long relied on AI for a variety of risk management and predictive pricing functions. We've witnessed rapid developments beyond reinforcement learning and neural networks in generative AI. Increasingly, we'll talk about a few examples shortly, these integrative technologies have become crucial and essential to providing financial services. Increasingly diverse industries and sectors of our economy identify opportunities to integrate AI. AI enables doctors to diagnose and map diseases earlier, faster, and with greater accuracy than ever before in the history of medicine. Farmers who cultivate crops that feed nations may integrate AI to better manage access to vital resources, such as fresh water, enabling more efficient irrigation, fertilization, and crop rotation, as well as sustainability. In our financial markets, AI offers efficiency for faster trade execution and settlement, more accurate pricing prediction, and more precise risk management oversight. Markets have witnessed increasing adoption of AI, including AI-driven advising, trade execution, risk management, and market surveillance. Financial services firms are fully embracing the powers of AI, making increasingly large investments in the infrastructure of AI to support and expand the roster of use cases. According to one economist, by 2027, investments in AI will reach $97 billion. While we note the exciting opportunities that AI creates, it's imperative to also reflect upon challenges. As AI adoption expands across markets, there are a number of notable challenges. For many, the cost of relying on LLM or agentic AI will place these technologies beyond their resources. Let me say a bit more about this. The high cost of developing AI technologies and the infrastructure to support their use poses significant accessibility and inclusivity barriers, particularly disadvantaging smaller competitors and institutions in emerging markets. These barriers limit the widespread adoption of AI-driven solutions, which can disproportionately affect the underserved and economically disadvantaged populations who would benefit most from integrating and improving financial services. The resources to operate AI technologies can, in some cases, be astounding. The energy to operate a single mid-sized data center, which can be required to operate certain AI technologies, might consume electricity equivalent to roughly 50,000 homes. These are resources that could be diverted from other necessities. This can make it exceptionally hard for emerging companies to incorporate AI in their services and infrastructure. To that end, we're seeing private companies from partnerships begin to make necessary investments to scale up AI capabilities in Africa. Specifically, Cassava Technologies, a global technology leader of African heritage, partnered with NVIDIA to develop Africa's first AI factory in South Africa this year. The partnership will reportedly allow Cassava to deploy AI software at facilities in Egypt, Kenya, Morocco, and Nigeria as well. In the United States, consumer-facing AI initiatives have gained considerable momentum, driven partly by regulatory encouragement and technological advancement. At the CFTC, we're integrating AI in a number of market integrity and risk management protocols. In particular, firms that we regulate are implementing this technology in consumer-facing ways, but it's critical as these technologies are integrated that we're thoughtful about fairness, transparency, and privacy, particularly stressing the importance of avoiding algorithmic bias and maintaining consumer autonomy. Consumer-facing AI initiatives and international regulatory frameworks has increasingly become an important topic, and I think will be a critical discussion for us at several events today, but certainly over the course of this week. The Financial Stability Board has highlighted the importance of international collaboration in setting standards for responsible use of AI, advocating for coordinated frameworks that encourage consumer protection, fairness, and transparency. This international collaboration is quite important, but has to integrate and incorporate and include countries in a number of spaces that have not had as critical a voice among international standard-setting regulators. Countries like Singapore, for example, have made significant strides in regulating and supporting consumer-facing AI applications. The Monetary Authority of Singapore's regulatory sandbox framework, for example, has allowed fintech startups to test drive AI solutions in controlled environments, balancing innovation with consumer protection. Through strategic partnerships between AI startups, large corporations, and government agencies, we are seeing increased use of advanced AI technologies. For example, ICOG Labs, a research and development company based in Ethiopia, is collaborating with international AI research groups and serving customers around the world on projects that involve deep learning algorithms for vision processing and object recognition. In many ways, I've been very fortunate to directly witness instances in which African fintech firms have leapfrogged the rest of the world in embracing innovative technologies. Sitoyo Lopo Koigit, who we affectionately refer to as Lopo, and many of you know as the founder of M-Pesa, is one good friend who has talked to me extensively about his experience in the rise of M-Pesa, as well as managing the company's immediate and longer-term future. The strategic partnerships that M-Pesa and other firms like M-Pesa represent illustrate cost-effective approaches to mobile-first innovations that can significantly reduce barriers, enabling AI adoption and growth of consumer-inclusive financial services. I know many of you are familiar with M-Pesa and the work that it has done to create opportunities for individuals without access to banking to store on cell phones or send balances using pens secured by SMS text messages, or enable buyers and sellers of goods and services to redeem and access purchases and balances, as well as make deposits. M-Pesa represents the potential to develop platforms that give customers access to banking services, reduce transaction costs, and overcome endemic frictions. But M-Pesa is not alone. I fortunately increasingly met a number of entrepreneurs who are developing and launching financial services and other businesses across the continent of Africa. This inspires me tremendously, and I have to signal that being at this conference is just energizing. AI is dramatically reshaping consumer finance through innovations, and each of you are deeply contributing to how that reshaping will take place. Continued partnerships between African fintech innovators, African regulators, and international regulators can help to foster shared growth and technological advancement. These collaborations offer significant opportunities, combining African innovation and financial inclusion and mobile technologies with the strengths and opportunities that come from global research and infrastructure. These synergetic relationships can enhance global fintech capabilities, drive inclusive economic growth, and promote greater financial stability. Conferences like this conference today are vital to the importance of the notion of collaboration and the creation of opportunities. Being here today, I know that we are empowering not only the development, but also the opportunity for consumers to have more control and access in financial services than ever before. Thank you so much for allowing me to be here today. Thank you for allowing me to join you and partake in the wonderful energy that this conference generates. I look forward to meeting so many of you and hopefully joining you in Accra later this year.